Here's a sobering reality check for anyone eyeing the property market. Mortgage rates are creeping back up, and it's sparking a wave of uncertainty for both new and existing homeowners. But here's where it gets controversial. While the increase is slight, it comes at a time when many were hoping for further drops, leaving borrowers wondering if this is just the beginning of a longer trend. After months of declining rates, the latest data from financial experts at Moneyfacts reveals a modest uptick, marking the first month-on-month rise since February. So, what does this mean for you? Let's break it down. For starters, the average rate for 2- and 5-year fixed mortgages now hovers around 5%. While this is significantly lower than the peak seen in recent years, it's still a stretch for many households, especially when paired with rising living costs like food prices. And this is the part most people miss. Over 80% of mortgage holders are on fixed-rate deals, meaning they're shielded from immediate changes. But hundreds of thousands of first-time buyers are eagerly waiting for lower rates to make their home ownership dreams a reality. Rachel Springle from Moneyfacts didn't mince words when she described the situation as potentially disappointing for borrowers. She pointed to volatile swap rates, which lenders use to predict the Bank of England's interest rate moves, as the culprit behind this sudden pause in rate reductions. Simon Gammon of Knight Frank Finance echoed this sentiment, noting that lenders are treading cautiously, with some nudging their rates upward. But here's the silver lining. This isn't expected to spiral into a sustained rise in borrowing costs. Instead, we're likely looking at a prolonged plateau until the economic outlook stabilizes. To put things in perspective, rates today are still far lower than they were 2 years ago, when a 2-year fixed deal averaged a staggering 6.67%. However, for homeowners who grew accustomed to the rock-bottom rates of the 2010s, even this modest increase means recalibrating budgets to accommodate higher monthly repayments. The government has pledged support with the cost of living, but all eyes are now on Chancellor Rachel Reeves's budget announcement in November. Here's the bold question. Is this the right time to lock in a mortgage deal, or should borrowers hold out for better rates? Moneyfacts Springle advises caution, urging borrowers to assess their individual circumstances and seek independent advice, rather than rushing into decisions fueled by budget speculation. Meanwhile, the Institute for Fiscal Studies has warned the Chancellor against directionless tinkering in the upcoming budget, adding another layer of complexity to the financial landscape. So, what's your take? Are rising mortgage rates a temporary blip or a sign of things to come? Let us know in the comments. We'd love to hear your thoughts.